All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for April 8th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 424. So my name is David Cosmeter. I'm the creator of TimingResearch.com, and today we have arranged for another Option Professor Market Outlook episode. So I'm going to go ahead and turn it over to the Option Professor.
Okay, thanks a lot, David, and welcome everybody. Just a quick background on myself. I've been doing the investment business here for decades and decades and decades, and I've traded thousands of options and millions in stocks. And I've been trained at the Options Institute in Chicago a long time ago for advanced option trading. So I know an awful lot about the product, and I also know a lot about investing because I've been doing it for myself and I've been in this thing for a long time. So I'm going to share you my views, my opinions here today. Remember, you should consult your brokerage firm to determine your own suitability and risk tolerance, and past performance not indicative of future results. And the information and ideas I give you are strictly my opinions, and they are not advice. Okay, so without further ado, let's get started here and find out what's going on. And I'll share you my thoughts. There's a couple of exciting things I think going on here. What am I watching this week? Like everybody else, we're going to see CPI on Wednesday, then PPI. So if those numbers are hot, obviously that would be make it more difficult to cut rates. And basically, we have got the earnings starting on Friday, and they better be darn good. Starting with the banks, J.P. Morgan and Wells Fargo and Bank of America, and that kind of thing, and they had better be good because everything's been bid up through the roof, right? So obviously, it hopefully is not a buy the rumor, sell the fact type situation, but obviously that's a risk when you run up this far in advance of the earnings season. So we keep an eye on that as well. With regards to also in the news, Taiwan Semiconductor, which I'll go over, got a billion, a multi-billion-dollar deal from the government to build the plant over in Arizona. It seems to me what they're doing here is what I hear is that they're trying to give billions of dollars to Intel and to Taiwan Semi to make up for the difference in profitability from where they would make it over in China. And so I think their margins over there is like 70 or 80%. The margins here are going to be like 40%. So that's obviously there's a gap, and the government would like to incentivize people to go over there and make their chips in Arizona. So they're putting up billions of dollars to bridge that gap of profitability to make it make sense to come over. And of course, the all the other firms that go into the process, they're trying to incentivize them to come over as well. Clearly, if we're going to be going into this AI situation, and according to Jamie Dimon, he thinks every part of his business is going to be affected. Again, just like cloud computing, if cloud computing eliminates jobs and makes it more profitable for a company, people are going to do it. If this AI is going to eliminate the grunt jobs or many of the other jobs, they're going to go to like, hey, I got $1 million. I'm 65 years old, and what should my asset allocation be? Rather than having John Q broker give you a hand, they might just have these machines give you a brand, give you a hand putting an asset allocation model together. So again, I think that's the direction it looks like it's going. We'll see how good that is, because just like Buffett said, AI can't tell a joke, which means it isn't human. And so basically, we'll have to see if working off past data, working off, former information is really going to be effective looking forward. But if the companies can save a buck on it, like with cloud computing, you can bet they're going to give it a go. And that's why the stocks in that industry have gone nuts. Okay. So that is a couple of things going on this week, and let's get into some of the markets. I'll give you my broad strokes, and then I'm going to go over some stocks that I own that are doing quite well today, and I'll go over some sectors that have done very well for me today, and then I'm going to go over a sector that seems to be on the verge of maybe going someplace as we go into the summertime. So, got some stuff to talk to you about, and we'll get into it right now. All right. And by the way, if you have any chat questions, you got the chat thing there. So if you have a stock or something you want to talk about, I can give you my opinion on what my indicators are doing. All right. All right. Whenever I look at anything, I look at everything on a long term, intermediate term, and short term basis to get to what I call the complete picture. So here's the problem with the stock market people don't understand, and I'm going to make it understandable to you. We had a situation back in 2018, and can you see the RSI there in January of 2018? It was at 87.73. Okay. Then if you go over to the next hump over here, the RSI hit 59 and hit 78, but certainly lower than the other one. And then we had another big pop to 2020. And then that was right as the market was peaking, right before that big COVID deal. And look at the RSI up here was more like in the 68s. So, you had a high in the RSI in 2018. Then you had another pop in later in 2018, a little higher, but the RSI did not make a new high. And look at that reversion back to the blue line. And then you had even a higher high here, which would be a real good pop in 2020 before COVID. And that RSI only hit like 68. And look at that reversion, not only to the blue, but it actually made a run at purple, which is very odd. You can see it doesn't go after purple too often. So then you had a big run up here, and the run up here peaked out with an RSI of about 75. Is that it? 75. Yeah, right around 75, peaked out. And now you come over here and you see the RSI is in the 67, 66 neighborhood, and you're way higher than the former high. So, no, I've only been doing this for decades, so don't listen to me. But I think there's a risk of a reversion at some point, and what would cause a reversion of significance? Well, come on, this oil goes to 110. How about the rates don't cut, but I have to go up to 6%? Just things that nobody has on their radar right now. How about gold goes to 3,000? Those things happen, and you're going to see a different landscape, and people are going to start freaking out. Because I'll tell you one thing: the day that the consumer decides that their credit cards are too high, their job is not secure as much as it used to be, and they stop spending like the drunken sailors they've been spending like, this thing is 70% based on that. So just think, if that 70% got damaged in some way, shape, or form, psychologically or physically, uh, then you'd have the recipe for a pullback that nobody is looking for. Okay, but we don't fight the tape, so obviously the tape is still looking quite good. But we also don't think that we're in fairyland, that things don't ever come down, because you see, I've got evidence right here. They do come down. They do come down. They do come down. So at some point we will have a drop. And of course, trying to be the least vulnerable when that happens is probably not a bad idea, right? Okay. So let's go to the 5-year graph, see what that looks like. And then again, you're way up here in La La Land, but you're not that far away from the averages here. So here you got warning where the red line is, which is at 5,100 ballpark. And then if you go through 5,100, you got the air pocket, and those are the air pockets right there. Okay, but nothing's turning down, and you'll notice if we're going to get a significant drop, my lines start pointing down, and that's not the case here. So, to be honest with you, my feeling is, I'll show you my feeling going back to the 20-year graph. My feeling is when we were right here last October, October 2023, right here at 4,100 ballpark, we were at a very big juncture, because anything knows about charting is, if you make a high, you come back down to 3,500, you come up here to 4,500, don't take out the high, and then you start blowing out this neighborhood here, you're going to have a real big problem. Okay, so the bottom line is did you notice right around here when we were right at crunch time? That's when we started talking about cuts, Fed cuts in next year. That's when old Powell decided this was the day to talk about Fed cuts in 2024. Why do you think he thought that? Because these lines were joining together, and if they started pointing down, that would have been a big problem. And one thing about Powell he knows is, if deflation or the consumer stops spending money, there's going to be a lot of problem in the heartland, because there's a lot of debt out there. And if you think big debt and a slowdown of consumer activity is not a problem, go ask Mr. Xi over in China, and he can explain that it's a big problem. So he comes out with we're going to cut the interest rates next year. And of course, we're already hit in May before you know it, and there are no cuts. So that could be about as accurate as transitory inflation. And we're going to hike rates to 550, and the economy is going to slow down, and all the other inaccurate things the Fed has been talking about, right? Well, we might have to pile this one on as well. At any rate, so we are off to the races, because everybody who's got a pension plan, every guy who works at BlackRock. I mean, have you ever heard of Larry Fink? He runs BlackRock, and he was on TV, and he told everybody that they should put 100% of their money in stock. if they can handle it. Well, if you want it to go straight up, you can certainly handle it, right? So the bottom line is that there was obviously some type of an agreement to talk this thing up because there's an election year going on, and obviously they would probably want Trump in there since Trump's already said he's going to get rid of Powell. So the bottom line is we had this little rally here, and it's based on two things: expectation of rates cut, and the earnings are pretty good. But are they as good as this? Maybe not, but they are pretty good. But this is a lot of it that we're going to get easy money. And if we don't get easy money, obviously that might change the landscape. All right. But I just wanted to show you why I was extremely bullish here, particularly right after he said that comment, because that was his get out of jail. That is the get out of jail free card that he gave the market back in October. And again, BlackRock is on there saying 100% in stock. Everybody who has an advisor telling him to get in, get in, get in. All the sideline money, come on, get in, get in, get in. Okay. And that's how you get that kind of run. Because again, we're in a no seller environment in the last 4 months. Now, if nobody's selling, somebody's selling, right? And who do you think is selling into all of this buying? Obviously, the market makers would be one candidate. And so the market makers are taking in all this money, all this volume, all this enthusiasm, and now they're on the sell side possibly. And how do they get their money back? When there is a reversion to the mean. And they must have some confidence that might happen because obviously they're taking in an awful lot of activity here, possibly. Okay, that's just my view. Let's go to the 1 year graph, and you can see it's starting to melt. The ice is melting just a little bit here. We have a RSI at 68, then we got RSI at 64, then we got RSI of 48. So Rome is burning a little bit. I would just call it smoldering at this point because all the lines are still pointing up. Okay, I'm a patient man. I don't want to sell before it's time to do it. That when these things turn down, they go down for a while, right? So I don't have to be the first guy at the party, but I can see the first thing that has to happen is you got to get under the red line. And then you got to stay under there for a while. So where's the red line right now? It's at 52, 52. This is on SPX, okay, not the future. This is cash. So where are you? You're at 52.18. We're at 52.10. So if it starts getting above 52.18, that means it's not time yet, right? That's all it means. And we did come down and test blue. Now, if you're going to buy a bull market, you don't buy it when it's way away from these averages. If you have a brain, what you do is when it comes down to green, you take a shot. When it comes down towards green, blue, you take your shot. Comes down towards green, you take your shot. Just came down to blue, you take your shot, right? And then boom, if it goes back up, you're back on the pony, right? But if you buy when it's way away from the averages, then it pulls back, then you got weeks or days or whatever where you're not going to be very happy and you're going to be hoping against hope that these lines hold. Once they actually hold, you're in a better condition. All right, and you can see the RSI above 50 pretty much ever since November. So there's a bull market, right? Boom, 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 boom. Nothing to be worried about. Lines are pointing up, RSI is above 50, it's a no-brainer, right? Okay, so that's where we are on the S&P. And my belief is S&P goes and the other ones just follow. In other words, when the S&P is rising and everybody's excited about AI, then of course Nasdaq is going to probably outperform and growth is going to outperform the S&P because the S&P has a bunch of that in there, but not as much as QQQ, right? And then of course, when everybody thinks these rates are going to drop and the world's going to be lovely, then obviously they go down the risk spectrum and they start doing the small caps. So let's go take a look at that real quick so you can take a look. Small caps and mid caps. Those are smaller companies that higher interest rates affect not very well. And again, here you can see it has not made an all-time high. You see the all-time high over here, 245. We're way down here still. Okay, so that is meaning that either A, it's going to play a mean game of catch up, or this thing is going to dissipate and we're never going to get to the new high. Okay, most people tell me we're going to go break out those new highs, the Tom Lees of the world and that kind of thing. So basically, that could happen because the trend looks like it's up. On a 5 year basis, again, it's been following up there pretty nice. So, you get bullish down here at 180, you stick with it, and you're still sticking with it, right? And the RSI is comfortably above. So, right now, the bet is up, right? The bet is up. Any cracks in the 1 year? A little bit here, maybe. Let's see. RSI over here is 72. Now it's at 57, and over here it's at 58. So yeah, it's slowing down. The engine is running out of gas a bit, but we have not gotten a confirmed rollover. If this thing starts rolling over, meaning getting under what? If the small caps get under 204 and stay under 204 and turn these averages down, then you've got the air pocket all the way down to here. Now, again, it doesn't look like that's happening right now. So this is not something that's happening now. But would I be on guard for it? Sure. But if I have a gun to my head and they say trade it, you got to trade it from the long side still. Okay. Okay. So that gives you a little idea on that. And then I'll just give you one on mid caps. And then I'm going to get into some stocks that I own that are having a good day today, and a couple of sectors that have been very good to me. So I'll explain that to you too. All right, so where are you in the mid caps? Same story. You came down and hit the blue. So if you wanted to buy this mid cap thing, this is a Vanguard ETF. You would have picked it up down there around the 230, 229 area, right? And now you'd be in the plus side about 3 or 4 points. And if it gets back above red, which comes in at 234, let's call it, then you should be back on the bicycle here. But can you see if we have anything that would cause a correction underneath here? There's an air pocket here, and nobody's ready for that. Now on the RSI thing, you got 62, and then you got 61 and 54. The failure to get really through the 60 number is also something to be concerned about, because, if we can get through that 60 neighborhood, we can go into the acceleration phase. If we can't, you're looking at the top. So it's a pretty important neighborhood this is in right now. Okay, so that gives you a little bit of idea of the indexes. And let's take a look at the semiconductors, because I'm sure most of you guys are interested in that. Let's take a look at the semis real quick. Okay, the semis. This is the SMH, and it had the big move up here. And again, now it's kind of, shall we say, it's losing some strength, losing some altitude, but still okay, right? Look at it, you see, still okay. And obviously, if you're going to buy it, what I tell you, you buy it against the lines, right? So right here, when it pulled back towards 218, 219, whatever, that would have been the place to take your shot if you want to be long. And as long as it's above there, you're okay. Looks like it anyway. Okay, so anyway, it still looks all right as far as the semis are concerned. But I mean, you're 4 miles away from the moving averages, and I've been around long enough to know that that's going to revert back to the mean at some point. It just is not time yet. But believe me, in my view, it's going to, when this thing was up here at 160, if somebody told you it's going to revert to the mean down here where the gold line is at about $100, you think anybody would have believed you? You think anybody would have said that makes sense? Of course not. So right now, if I tell you at some point this thing's going to revert to these means, of course it sounds like an idiot, because that's not what's happening now. But if you've been around the block more than once, what's happening now is not guaranteed to last forever, and things change. And when they change, the prices do as well. Okay. All right. So anyway, looks good, but extended. I would call some of these things too high to buy, too strong to sell. Let's talk about gold real quick. I'm going to go through a few things, then I get into some other stocks here. Let's look at the June gold, because the June gold is the one people are trading, because we're already going to be going off the board on that April. Okay, so the June gold going out to the 20-year is again a breakout. And one of the reasons I thought it was going to break out is obviously because the trend's up, and you can see right here it's been a buy against the blue, the red pretty much all the way. And then it did come down here in 2022. So obviously that looked very bad. But just like on the stock market, when these lines join together, like 4100 on the S&P, and they take this thing down underneath it, but these lines are still rising, this is a fugazi drop, meaning it's a false or fraud drop, meaning that it's not going to last. And then once it got right back above at 1800, you had the green light to get in there. And that's what I told people. And then on the pullback, that was your neighborhood to get back in as well, because the lines are still rising. You see, it's not going to go down for very long, in my view, unless the lines are pointing down. I learned that in third grade here, you see. Boom. So, where are we now? Look at it. I mean, what are you going to start buying here? Well, good luck, because there's only one outcome that'll work for you, and that's parabolic rise. The other outcomes of sideways or down are not going to be very good for you. So the bottom line is that, again, when I'm interested in it down here, no problem. If you're interested up here, you go alone, because I'm not interested in it up here. Stuff that I own and I'm holding, sure, but I'm not interested in initiating new stuff in la la land here. And I have no idea where it's going. Some people say 3,000. Why not? I mean, freaking Bitcoin is what, $72,000 for some electronic thing they make in the basement. I mean, and it's backed by what? I don't know what it's backed by. Nobody can give me a straight answer on that. And it's digital gold. I don't know, digital whatever. All I know is, it's not, backed by a government. It's not backed by anything. Of course, people say that's a good thing. How I don't know how good they're going to feel if it goes back to 10,000 and they bought it at 70,000 that nobody's backing it. But it's unregulated. People like that. Wild Wild West. Wild Wild West is good until obviously crime happens, and then Wild Wild West isn't so much fun. So the bottom line is like Druckenmiller said, he think he has some respect for the Bitcoin, probably should own it, but he buys the gold because gold is a $10,000 brand name, and Bitcoin has a 10-year brand name. So that's a pretty interesting way of putting it. But anyway, you can't, you don't fight City Hall. Obviously, I'm all over this thing months ago, and let's look at silver as well, because silver really just did break out, and so silver was interesting. And again, that's just getting going. Right down here at 2250 was the neighborhood where I was saying get into the thing. But right now, if it breaks above 30, there's a mean game of catch up that could go on. So you got to keep an eye on that one. The breakout to me was $26. As you can see, once it got above $26, that's when the thing really got its legs. And like I say, if it pulled back to 26, $25, that would be the neighborhood, that it might be able to get onto something. Because this RSI thing doesn't look like it's fooling around. In other words, it looks pretty good. 5-year graph, breakout. 1-year graph, breakout. Possibly pull back here. And that's the breakout point. So if it does do something like that and things still look like they do, that would be the neighborhood where an entry might not be the worst thing in the world. Okay, so there you go. You got the metals, and now let's give you some overview on the energy, because that's another one that's been very good to me. And here you go with May. Again, when they're extended, there's a risk of a reversion. Okay, so like I say, I'm not interested in starting positions at $88 or whatever it was. Yeah, $88. That's not where I dust off my buy tickets, right? So it gave me the buy signal down here on the crude. Once it held, let's go over the 20-year graph. I'll show you. 20-year graph. Okay, you see, it was here, all here. This was your neighborhood where you wanted to get, long. Why? Because it's testing the long-term averages. And if it tests those and hold, it's a great place to buy. If it tests that and break down, you're going to get this kind of action, right? And obviously that's no good. So right now it was testing it here at 65 to $70. That was the neighborhood, right? That I kept mentioning to people. Then of course, once it gets above the 80 mark, that's kind of telling you a bit of a breakout. And now it's kind of still looking like a breakout. And the RSI is getting above 50. So again, this is either going to be breaking out and we're going to see 100 or 110, which is very possible. Or look at it. If it starts breaking under 80, right? And then 77, this thing's going back in the soup. And if it breaks 70, Lord knows who knows it can go down here. So right now, yes, up. And yes, it looks good. But there are lines in the sand that must be held. Same thing here. Look at that. That red line looks like it really wants to go. And they're all in the same neighborhood. What's that neighborhood? 77, 80, 77, 79, 80, 85. So again, it's peaking above purple at $85, right? But peaking doesn't mean sustained. And it's already backing off towards 85. So if we get back under 85 and we get it back under 80, this thing is going to be vulnerable. And nobody's ready for that either, because they're all talking 100, 110. I'm talking 100, 110 if it doesn't do what I just mentioned. Okay. But I'm not going to be totally unaware of if it doesn't do that. Okay. So let the numbers tell you what to do. Don't you tell the numbers what to do, because you tell the numbers what to do, it ain't going to work very well. Okay. All right. So there you go on the oil again. And I'll get into some of the different shares that I have been involved in. And there you go on the 1 year. Excuse me, on the 1 month. So breaking under 85.94, Okay, getting back above there is key. So let's see how they take it home. Because if they take it home under 85.97 and 86.42 and 86.13 on a short-term basis, it could pull back. Okay. So again, in that stem up there, if it starts breaking the other way, is going to start looking like what? The Eiffel Tower. Okay. All right. That gives you a little bit of an update on the oil and and the other markets real quick. All right, so let me show you some of the stuff that I own that seem to be having a pretty good day here. The financials. So I'll go through these pretty fast. JP Morgan. Now again, JP Morgan, if I look at the 20-year graph, it's on an all-time high and it's 4 miles away from the moving averages, okay? So this in my view is not a great time to start looking at getting in. Okay, because you're going to really possibly have a reversion back to the mean at some point, and so the time to get in, you know, has come and gone. If it pulls back, like again, it just pulled back here a little bit. If you're a short-term trader, you had a little bit of a shot at 195. But again, RSI here at 65, RSI here at 68, RSI here at 63. So if it can't get through that low 60 neighborhood, you're not going to accelerate to the upside. If it does, this thing will blow out the highs and go further than you could ever imagine. Now, here's the deal. Keep it above 197, keep it above 194, keep it above 190, and then you still have a story for the upside. And the RSI has corrected back down, so there is room to go. But again, I'd keep it on a short leash. And these guys announce earnings on Friday, so this is going to either be jamming out of here, or it's going to be buy the rumor, sell the fact. What I don't think is going to be, I don't think it's going to be nothing. So it's kind of exciting to look at different option strategies up here. One of them is called a strangle, where you take calls and puts at the same time, and you just hope that all hell breaks loose one way or the other. You lose on one side, but the other side that will all hell broke loose should jump in premium for you, unless the premium, I'd have to price it out, unless the premiums are prohibitively high, and then of course it's no deal. Or you have to do two, or you do one of those condor deals where you do two debit spreads on each side, and that might be a way to play it. Anyway, the financials look like they're doing okay today. And I'll give you a couple other ones that I own that I'm pretty happy with. And Bank of America, still looking all right. And uh, Schwab, Schwab went way down. That was a good bargain. Okay, when they go down and you think it's a good deal, that's the time to take your shot. Let me tell you where I thought it is. See there? That's where you take your shot. $45. That's where you take your shot. Now you take, this is called plant your seed. This is called harvest the crop, right? And like I say, it's come up quite a bit. So if it starts getting under 70, I probably wouldn't like this very much. And if it got under 65 and 60, it would be telling me that this was just what they call a rally that's going to fail. So, but down here, you bet, you bet. Yeah, you bet. All right, so there's your financials, and those are things going pretty good. Some of these car companies are doing pretty good. I got Toyota Motors. Some of these things I've owned for a long time. Yeah, Toyota Motors, you can see on a 20-year basis, clearly a good place to buy right in here, 140, 150. And of course, this is way, way high. So it's called plant your seed, and there's your harvest, right? There you go. And, but they're going to do them pretty good today. That's why I mentioned it. And did pull back a little bit, but you can see, it's if you're getting into here, you want to have some kind of a leash here. So right now, 240 looks like a pretty reasonable leash, because if these things start rolling over, but again, look at the RSI is just turning up, so it actually, it looks like it was a good buy around 238, 240, you know, and right now it looks like it's trying to go back up again. So Toyota looks pretty good, as long as it stays above those numbers. Then you're talking about Ford Motor Company, and let's see what Ford looks like. Again, this is a cheaper one, so this thing got us going here at 1150, and then back at 12, and then back to 1250s. And look, it's been pulling back and taking off, so it's a pretty nice little trend here. Pull back, take off, pull back, take off, pull back, take off, pull back, maybe take off. We'll see. If it takes out 14, yes, it is taking off. GM is one of the stronger ones too, because they took their electronic vehicle bet and scaled it back, and that's probably a good idea because the level for electric seems to be a little bit extended. Everyone thought everyone's going to have electric vehicles by next Friday. It looks like they might have them by 2030 if they're lucky. All right. So anyway, this thing though is back on the bicycle again, just like these other guys. They go up, you pull back, you get in. Go up, pull back. That's where you go. Go up, pull back. If you want to take a shot short term, obviously that 44 number, 43 number should hold. If not, it's going to be more. And look at this. If it ever gets under 41, there's your air pocket. There's air pockets all over this place. And I don't know, maybe they'll never get hit. But at some point, everything gets hit. And so the bottom line is whether it's 2025 or 2026, I don't know. It could be, if anything weird happens with regards to the world. But right now, obviously, with the Fed talking that they're going to be cutting rates, it's kind of like, waiting for Godot right now. But it definitely has the boy who cried wolf, has all the people afraid of selling any assets because if they do start cutting 3 and 6 times and there's no evidence of inflation dropping or the economy slipping, it's like throwing gas on a fire right now because there's plenty of people out there spending. Okay, so anyway, there's you go with GM, and again, that would be the short leash you'd keep on that one. And then the one I like overseas is VWAGY, and that one I thought looks pretty good. I think it includes Porsche too. So yeah, you see, this thing got me excited here as it turned up off of 12 and then 13, and then turned up at 15. And so, like I say, it does seem like it wants to go someplace. And that's a nice looking. Everything's looking up. And then so Volkswagen is your European play possibly, and of course an American play too on the autos thing. So that's a good one. Those seem to be going pretty good today. I talked to you about Taiwan Semi, and again, Taiwan Semi is getting that contract from the government. And so again, though, you're not early on this thing. I mean, this thing was really at the 90 and 100 area. And again, always against these lines down here is always, this is going to be the last stand or a trend change. And obviously it was the last stand. So, patience, act when it looks like the risk reward. Obviously, if you buy here and you get out under the line, the risk is pretty low. If you buy up here and you're going to get out under the line, your risk is going to be 75 or $60. That's a little bit more risk. You know what I mean? So the idea is when you pick your spots, your risk reward ratio, can be a lot better from the standpoint of, where you'd get out because the trend is turning over. But right now, obviously, Taiwan Semi, they're the big creator of all these chips they talk about. So obviously, they're in high demand. But I'll tell you, you hear one like that, and then look at this one. This one looks like it's getting ready to go in the toilet. You know, I mean, this thing ran up towards yellow. This is your Intel, and Intel got under here, so that was the time to, obviously get going out. Red line turns down, telling you to get out, and that's at $45. It's already down to 38, and if it starts taking out purple, who knows where it's going? Because the timetable on all this stuff could be longer. And look, that blue line is pointing straight down, and that's not a good thing. So the longer it stays under 41 bucks and the red line coming at 39.26, this thing's better get back above 39 pretty soon. And if it does that and then got above the purple, which is at 42.24, then you could build a case that it's just having a pullback. So 35, 39, 41, those are the big numbers I'd be watching on this. And then if that's the case, this could be a heck of a place to buy into it because it's discounted from what? $50 somewhat recently all the way down here. So that's Intel. Another one that's doing good today for me is ARC. I guess old Kathy Woods is juggling the ball pretty good here, and it looks like it's trying to turn up. But again, the RSI looks like it's still can't get above sea level. And so it's a kind of a mixed bag there. Let's see what it looks like on the 1 year. Yeah, yes. Oh, there you go. There you go. If you're going to take your shots, I'm not the only guy looking at this stuff. Obviously, if somebody want to take their shot at $47, 46.67. Do you notice the low is 46.60? Duh. So that was where you're supposed to take your shot, and you're already almost $2 to the good. So that's not bad. But you're running into clouds right here. So I don't. With three of these things pointing straight down, that would be like Lawrence Taylor and two other linebackers chasing you. That might not be an easy neighborhood to get through without getting mugged. So there you go. Uh, be a little careful on that bounce. All right, so that's ARC. Uh, these are some of the ones that people have left for dead, but I bought it when they were way down, and they're good to me. So PayPal, nobody likes it anymore, but you know what? It turned up at 52, and I got a nice run. And then it turned up at 59, 58, and I'm involved in a pretty good run. And as long as it can stay above the green, which comes in at around 63, 62, you know, as long as it stays above 62, you can still build a case that that thing may surprise people on the upside. And that's PayPal. Next, another one that's doing pretty good today that I got is Roku. Another one that's kind of left for dead for a while. Let's see, Roku. Yeah, again, it's kind of like a dead man's bounce down here. But if you look at a 20-year basis, anything around this 50 neighborhood, 50 to 60, could be the end of the selling. It could be. This one wouldn't be any kind of favorite of mine, but again, when things go from 110 down to 50 or something like that, sometimes I take a look. And again, it's trying to come off the mat, but certainly not something I would rush out to get because most of the traffic is still coming down. A couple of REITs are doing pretty good, and I've owned this for a while. These Boston Properties. You see, when it went down here to 54, I thought it was a pretty good deal. And now that it's here testing right there, this is where I would be dumping if it breaks. So it was a good time to buy right here again at 60 bucks. And it's already at 63. And if you can get through this neighborhood, something could be going on there. And the RSI looks like it's trying to peak out. So that's a REIT called Boston Properties. And since I went to Boston College, maybe that made me buy it. Okay, because I know the properties cost a lot of money in Boston. A cruise deal. A lot of cruise things have done well, but this one hadn't been one of them. But it came down here, and so it's a good place to sniff around. And that's at 15 bucks or so, or 14.84, right? So 14.84, and it's already popping away from it. Gets above 16 or something like that. I just did some traveling around towards California, Nevada, and New York, and the planes were all pretty darn crowded. And we're going into the summertime, and people have jobs, and people still have money apparently in one way, shape, or form. So to think that they might have a pretty good summer season with the cruises, um, uh, Royal Caribbean gives you an idea that some of these cruise ships are doing pretty darn good, right? So I don't know if they're going to drag Carnival up with them, but if they do, there might be some upside there. Um, Now, of course, I got the Bitcoin for a long, long time. But I was out for a long time, and I'll show you why. On a 5-year basis, you can see that this thing, gave us the peak here in 2021, and it was a get out of town, get out of this thing all the way until 23. Then once this is the grayscale, I only use grayscale and Ethereum, GBTC and ETHE. I don't go for the wallet thing, or I don't go for Doge coins or whatever. So I only play the two games here, and so it's enough for me. So anyway, this is where you get back on the bicycle, and then once you get above purple and gold, it's lights out, right? So this was load the wagon time, and now this is harvest. Now again, this is way higher than the averages, and we've got the halving coming up. So just like when they came out with the ETF, right? You went from 46 right down to the line. That's where you get in. That's where you get in, right? So they had a big correction back to this is called a reversion to the mean. And is it possible they're going to revert back to the mean after the halving? It's possible. Now, again, this is a too high to buy and too strong to sell kind of deal. But would I be surprised if we got some kind of reversion back after the halving? I wouldn't. Only because why? It's extended. Same thing with Ethereum. On Ethereum. Whoa, that doesn't look very good. Ethereum. All right. Well, again, you can see here on Ethereum that it also had a big correction. Okay, way down, and now it's trying to get back on the bicycle. But the time to get back in on this thing was after it went through the correction and up here at around the 12 area, and you could have rode it all the way. Now, again, this is another example of if the averages are not all pointing down and it comes underneath the averages, it could be, probably is a fugazi, which means fraudulent, meaning not a pure. Don't trust it. Let's call it that way. I don't want to get too crazy with language here. Don't trust the drop because if the blue doesn't start turning down and it gets back above blue, then that probably was a bologna sandwich, and now you're back on roast beef. Now, again, you get way away from the averages, right? What do I say? It's going to revert to the mean. Do I sound like an idiot at 36? Yeah. Do I sound like an idiot down here? Not so much, right? So the bottom line is that this thing here has got to get back above 28 for me to have any interest. And if it did that, call me because it looks like it might be something reasonable. Right now, on a 1 month basis, it's trying to turn up. So if you're a real short term trader, as long as it stays above 24, these things will keep moving higher and you could get the run up towards 28. Remember, I told you I'd like to see it above 28? Well, there's a purple line telling me why right there. Okay. And there's your crypto. There's your crypto. Now, some of the silver stocks that I own have done well. And so again, here's where you get in $14, and here's where you have the harvest up at 18. The problem here is because it's going to run into some resistance, like right now. The purple line comes in right here. So if it can blow through here, which is at 1785, it can stay above there, it can take a run towards gold, which is 22. But it is pretty extended away from here. So if the silver does take a timeout, there's plenty of room for a pullback. You can see that a pullback to 15 wouldn't surprise anybody. But you see, this is called, this is off to the races. And if you look at the 20-year graph, the race could be very far because this stuff used to be at $40. So, if silver is really going to go nuts and we can stay above here at 1771 and we can get through $20, this thing still has a lot of potential. And the one that really did good for me was just cheapy. I love cheapies that do good because that means I don't have to put up much money. And this was Majestic on silver. And you can see down here, at $4. When you buy something for $4, like I did with Freeport McMoran at $10 of years ago, you're only risking that. So it's like a long-term option. As long as they don't go out of business, you're going to hold it, and then it's already got a double. So nothing wrong with that. But it's running into some clouds here, right? This is some resistance, right? So again, you have to see how it contends with this, because if it doesn't contend well, it's going to go right back down again. And on a short-term basis, that is the poster child of reversion to the mean potential. Okay. So that's why, I like to look at things at all different time frames, because if you don't, you're not even going to be aware where the heck you are. So, it's kind of like if I dropped you in Kansas, it would be nice to know that California and New York, where the shores are where they are. So you have an idea where you're located when they drop you into the middle of the planet, right? You wouldn't know that unless you had a big map, right? And that's what I want to do. I want to have a big map. Okay. Another one that is sneaking up here today. I'm big on Mexico because of the nearshoring, but this stuff here is starting to do something. And like I say, I took a taste here, and it looks like it's trying to do something. But I have to keep an eye on it because if it breaks above 33, there's a good amount of real estate above. If you look at the 5-year graph, you can see, this thing used to trade 48 and 42. And so if it can break above this 34 number, they could have some future here. And Brazil's like the biggest country in South America, and they're loaded up with soybeans and other natural resources. And so their government is obviously a little bit spotty, but, it is a country that has a lot of stuff going on if it gets going. Obviously, probably the reason it hasn't gone more is a lot of the political stuff that goes on down there. Okay, what else did I have to show you? Of course, if you want a one-stop shop for the industrial metals, which gives you an awful lot, it gives you a little Newmont, gives you a little Freeport McMoran, gives you a little aluminum. I think you can stop in here and take a taste here, because this is how I played the metals when I want a one-stop shop. And around $50 was the place to take your shot. And obviously, but I mean, it's not, it obviously can keep going, but it is susceptible to a pullback. But there's the trend on this stuff. It looks like it's getting ready to go maybe into the ozone here, because if it breaks 65, there's not a whole lot of real estate up here, so it could have a parabolic thing going on if if you can get up there. That trend looks awfully good, you know. But again, it's $7 underneath where we are. So, that means it can pull back. But, the traffic looks definitely kind of northern on that one, huh? And so that's pretty good. Bum, ba-dum, bum, bum. All right. Well, drum roll, please. With 15 minutes left, I am going to get into a couple of things. Oh yeah, on the international deal, I'm keeping an eye on. China is really trying to get things going if they can, and they're actually I think they're playing nice with Yellen over there this week. So I'm keeping an eye, and I got a position here in Las Vegas Sands that I'm hoping will work. Let's see if that hope means anything. You see, it's very close, very close. If we break through this neighborhood here on Las Vegas Sands, which is in the 55 buck area, I think it could go. I think it could go. So, and the RSI is trying to do something, but it's a little early. Let's see on the 5-year graph. You see, there's the red line's pointing up, which is very nice. And where's the red line at? 52 bucks. So let's keep it above 52, guys. And if it does that and breaks above 55 here, I think it could go on a little bit of a run. But if not, and China has more troubles, if it breaks 50, then it's going to have trouble. But down here was where I thought it was a good place to take a shot, and so basically that's a good entry level. And then now, can we break out above? Look where the RSI is, 53. Where was the RSI here? 60. We got to get through that 60, and that's where Bullet Bob Hayes will show up for you people who ever heard of him. Boom. So keeping an eye on that one, because if it goes, I live in Las Vegas, and I can tell you that the Asian area, breeds a lot of good gambling. So I would say that Macau. These guys are Macau and they're Singapore. So you don't get much more Asian in those two places, and there's money there. So obviously, if it gets going, it could really give you some good acceleration. Of course, win's another one to play as well, but that gives you a little bit of Las Vegas too. But again, that thing, if it can get through 110, to me, it looks like it's the same story. So if you wanted to bet two horses in this race, you'd bet the win, and you'd bet the Sands, and you'd see hopefully it'll be 1-2 at the finish line, right? Okay. So that was just something I stored, and then K Web is starting to look like it's trying to turn. This is something I own as well. And KWeb, is down in the doldrums here on a long-term basis. But if it can get turning, you can just see that there's a potential. But again, it's running into resistance. So again, in my view, it'd be a better buy at 27.50 or 28 than it is here, because if it gets up there, it's going to have momentum, of which it does not have right now because it's got resistance. But if China does turn it around, and there are people saying the PMIs are turning up, but who knows if you can trust them. But at any rate, and if they play nice with the US, and things calm down, this thing gets going. Because again, the blue line doesn't lie, and the blue line is pointing straight up, and that generally means that it's going to go that way, unless it gets under 26 and can turn that blue line down. So if you're asking me, what do I think? I think that KWeb and the two gambling companies are worth an eyeball. And we're trying to get something that's going to happen, as opposed to Nvidia, which has already happened. We're trying to get into something that might have a future. Not that Nvidia doesn't, but a certain amount of good news in Nvidia had to have been put in there a little bit. Let's just give you that real quick, since I'm mentioning it. I've been kind of cool on it after it hit about 1,000 there, because look, first of all, it's up here and the RSI is at 83. Then it's up here and the RSI is 71. That tells me it's running out of gas. I don't want any part of it running out of gas, particularly on that kind of a run. Plus the popularity of it. The guy who works at the Subway sandwich shop is telling me about it. You know what I mean? So, right now, if you did buy it against the 850, you'd have a reason to do it, because there's an air pocket underneath. So, this would be a neighborhood where if you want to take a shot, 850 neighborhood, is where you got some activity. Okay. But, you want to get a little bit scared on how high it is. It looks like the Empire State Building up here, on a 20-year basis, right? It looks like the Empire State Building. And when people tell me this stock can't come down, I keep telling them back in 2021, it went from 350 bucks down to 100. And if somebody told you it's going to go from 1,000 back to 800 or 650 or even down here, you'd say they're crazy. But what happens in a chip situation is if somebody comes out with a better chip, a different chip, or a cheaper chip, prices change. And if prices change and your margins go out the window, that's how the prices come down. I'm not saying that's going to happen, but I've just said it's not an impossible dream by Cervantes. Okay. All right. So basically, that's that. Now, let me jump over here to the main event here, which was these stocks. Jets. Jets is on the verge. You see the yellow line there? If we can get on the other side of the Berlin Wall here, right? Bam, then we get a lot of white area. So I'm watching this now. The blue is turned up, and the green is turned up. Excuse me, the red's turned up, the green's turned up. It's trading above purple. If we get above yellow, it's going to open this thing up, and the RSI is looking pretty nice. So this is where the future could be, just like in those Chinese stocks, right? So I am going to look at some of the proponents here. Everybody heard of Delta is ready when you are? Let's see if they're ready for us. Looks pretty good there. On a 20-year basis, it's above purple, looks pretty good there, but it does have a RSI of 58 and RSI of 58. So what I tell you, if you start hearing deltas above $50 and $55, it's probably going to be accelerating to the upside. If you hear that it has not gotten above $50 and it's trading under $40, then this party is now over. So the bottom line is that's your parameters. Get above 50, you got a possibility of a good acceleration phase. If you pull back to 40, that might be the area of support. And if you start hearing 36, that means something's happened. And it's not going to happen. Next one after that is going to be Alaska Air. Again, came down to here. So this is where you take your shot at $35. It's already $8 to the good, and it has some potential if it can stay strong. The RSI is on the verge. That's what I'm saying. Some of these things are on the verge. They're not there yet, but on the verge isn't bad if it's going to happen, because again, the darn thing used to be at 105. So you're messing around at 35. That's not a bad place to mess around if it's going to hold, like it held here and it went from 25 to 75, right? So again, this is the neighborhood when I'm at least monitoring it, and I would suggest you do the same. Southwest Air. Again, it's right against gold here. So if it's going to be any good, this is the neighborhood where it might base out. Keep an eye on it. Used to be $65. And then we've got UAL. Again, trying to get going here. Okay, but if it fails, it's going to fail from here. So the bottom line is you monitor this, and if this thing starts turning up and you start seeing 50 or something like that, or let's see where else you'd see. Yeah, if you can start seeing it back above 46 and 48, then it's going to be on the bicycle again. Again, it's starting to fade right now, but then RSI is trying to turn up. Again, we're going to be going into the summer travel season. Are these guys going to make any money? If they are, then they're probably going to have their stocks go up. If they're not going to make any money, or they don't know how to handle the customers properly or whatever, then obviously I don't know what environment these guys would ever win in, because we got consumer spending going nuts. We got the great weather coming up, and we got people coming out of the winter area trying to have some fun. So I mean, when else are they going to make any money? And then another one after this one would be American Airlines, which I thought looked better than most others. Let's see. Yeah, well, again, it's right there against purple. That's why I liked it. Yeah. So this thing here, it's right against where it's got to hold. You know what I mean? And then of course, if it gets above here, which is 1431, that would be a positive. So again, if you start seeing this thing getting above these numbers, and they got a gap up there, if it starts turning around, there's a lot of real estate where it could make up. The cheap ones, I thought they would be worth a look. There's three cheapies that I keep an eye on here. Spirit Air, but again, it looks like a dog, but it's a dog at $4. So as long as they don't go out of business, hopefully it won't go to zero, but that's your risk, 465. And RSI here was at 30, and RSI now here is about 30 again. So no big divergence down here. That would be nice to see that, but we don't really have that. And on a 1-year basis, again, not that much to save. So next one up there would be JetBlue. Now they were going to have a merger and they got it called off. So maybe that helped JetBlue. Let's see. Yeah, it did help JetBlue. You see, they said you couldn't merge, and next thing you know, JetBlue's gone from what, $5 up to 7. That's 50% jump. Nothing wrong with that. And this thing definitely has a better looking chart. So if you wanted to pick one cheapie, I think the JetBlue looks like the one because it has a much better chart than the other. And the other one is Frontier, which is UL. Where is that stuff? ULCC. I don't know why they call that Frontier, but that's what they call Frontier Airlines. Okay, and this is another one that looks better than the Save. So the two cheapies that look the most reasonable here from the chart standpoint, as long as they don't fall apart, would be Frontier and JetBlue. So I thought that might be interesting. You know what I mean? To keep an eye on a sector that their business should be picking up looking forward. Um, and I'll put the cherry on top by looking at this thing here, Coupang, because to me it looks like it's something could be going on here. And this is owned pretty strongly by some pretty big investors, so I thought that was interesting. But again, gave you the buy signals here down here at 14, and it's been building and all the averages. Now the red started to look weird, so you definitely want this thing to try to stay above the 18 number area. Okay, so the red pointing down does not make me feel very good about it, but the 5-year graph, you know. Is they're all merging here at around 16, 17. So as long as the thing trades above $16, it opens up the possibility if it gets above 20 to fill in some of this air. So again, if this thing gets above 20, there's a lot of potential here. And if it can hold 16, at least that's a line in the sand that a couple of bucks away from where it is now, which is not bad. Okay, what I was going to say now before we shut it down is I want to show you how you can get a hold of me and what I can do for you. I didn't go into the options that much because, that's something really I find doing it one on one is very helpful. Meaning, I don't know what you need to know, but I know a lot about it. Right. So, what's the best thing to do is to speak to me directly and you tell me the things you don't understand. I'll share with you things I think you should know, and then you'll become obviously a more educated person. And again, I don't charge this monthly stuff or this annual stuff and these thousands of dollar stuff. And I don't know who does. I don't know who you're talking to, other than I hear people promising or talking about all these wonderful gains they have, and then most people I talk to, they hook up with these people and they all lose the money. Anyway. I can tell you one thing. I know a lot about the subject matter. I use my timing indicators to give me an idea on when to get in, when to get out, entry and exit. It helps me quite a bit. I use it with my own money. And so that's a pretty good deal. And then, of course, like I say, rather than rubber stamping, because there's so many different levels of knowledge out there. But again, as far as my experience and knowledge, I think it goes right up there with anybody's. And so I think I can add value to your educational process. I can show you things that I'm doing and why I'm doing them, why I have done them, show you some past ideas that that have worked out and why they've worked out. And then of course we can look at stuff that you've got and see if you might be holding on to a time bomb or you're holding on to something good or where you might want to be concerned or where it might be going. Try to do some technical analysis to try to help you there too. So the way you do that is real simple. You go to optionprofessor.com, OPTION professor, PROFESSOR.com. You put in your name and your phone number and email, and then I call you back and I go, "Hi, I'm Jim, and I'm going to send you a link to my timing indicators. And then when do you want to have your online meeting with me where we can talk with the charts in front of you and educate you further on the options and help you become obviously a smarter investor?" And then we come up with a time, and that's when we do it. So it's a good deal. I mean, I know it's a good deal. The price is. I compare it to going out to dinner with a couple of people. So it's in me, it's a no-brainer. I put the price as a no-brainer because I don't want to argue about money. And I know in my mind you're going to get more than you pay for by a long shot. And so this is a chance to talk to somebody who's done this for a long time, who has done seminars for a long time. And I'm very familiar with educating people who have no experience to some experience, and some people who thought they were experts until they had our meeting and they found out that they had a lot more to learn. So again, I'm Jim, the Option Professor. Go to the website, optionprofessor.com, put your information in. I'll check back with you and I'll see if I can help you. I'll tell you exactly how it works. And then you'll tell me if it's right for you or not. Okay. All right, guys. Talked about a lot of different things here. Hopefully, some of them helped you quite a bit. And it's always a pleasure to talk to people, educating them. That's how I get a kick out of life, is trying to share with people some of the knowledge that I've garnered over all these years. Okay. Have a great day. And of course, no matter who you're rooting for tonight, you're going to have a fantastic game because you got UConn. They got a 7'2" guy. Purdue's got the 7'4" guy. And UConn looks like they can't be stopped. And so it'll be quite a game tonight. So enjoy that, and hopefully you enjoyed the Caitlin Express from Iowa. Well, what an exciting player she was. But yeah, tonight's game is going to be great, and so enjoy yourself. Go to optionprofessor.com, and we'll talk after the game tomorrow. Okay, have a great day, Ben.